Good morning. I've got to open up. I don't want that. We're going to close that down. We are going to open this up. Hit the thumbs up button. I'll probably say that again. Hit the thumbs up button. TrendSpider is on sale. I'm going to quit my calendar. You can't see this, but I'm going to quit my calendar. I'll open up GarageBand. We're going to I'm going to send these to the trash. Send this to the trash. I thought the podcast actually sounded pretty good yesterday. That's just my take on it. But let's move that to trash. Let's move this to trash. Screenshot, move to trash. Morning, James. Pod intro. I got my podcast up. Let me do this. And we'll delete that. Bring that back there. I'm probably going to have to. The dogs are stirring around. So, I think, so I just saw a headline that natural gas is at its lowest price since February. I think you're right. I think Boyle, let's look at Boyle. Here's what you have to look at, though. The reality is a Boyle is that you have to go to this, I think it was weekly that I went to. Yeah. You have to look at that. I mean, you're at 1428, but from a trend line perspective, today you should be at $2. So, the straight line here makes no sense in the historical. I mean, just look at the historical of this one. It makes no sense. Now, here, you saw in 2012, that's even, I'll be right back. Dogs are barking. Okay. It's pouring rain out here. Let me look at, yeah. I'm going to go to Active Trader Pro. We'll look at Active Trader Pro. I got time. Let's look at Boyle. You're up slightly in pre-market. But I think that's only because you've had let's look at a 1 month. Look at the 1 month of this. The only reason you're up is because these are so far down. Doesn't mean that this one's going to fly up because, like we said on TrendSpider, look at that trend. I mean, even if, let's do this. We're going to take this trend line out, remove all annotations, and then let's just draw another one. Let's draw a channel here. We're going to take, since this is historic, let's start here. So we're going to take a trend line. Remember, you got to touch 3 points. And we're going to take that, and we're going to assume that's the high. Then we're going to touch 3 points on the low where it is today. Even if you're assuming that that's kind of the low, you don't get near, if we were to draw another trend line from just say this low, and then we were to go down to these two lows right there. You're not even down to this. So I'd be no, I would not hold KOLD long. I just, again, you're down to levels that you were at February of last year. Here, remember, these are commodities. Commodities kind of swing in price, and it's just, I'm no expert at this stuff. I just know that you get slaughtered in a lot of these triple levered ETFs. And it's best to trade them. And because these are decaying in value, you don't want to hold on long term. You just don't. And yeah, if we go just to today and we do a 1 minute chart of Boyle, see? I mean, it's just all over the place. But, you could scalp the. If I were doing Boyle, and I may do Boyle, in my $1,000 portfolio, I'm in a gambling mood. But it's raining outside, and I want to do yoga. I didn't get to do yoga yesterday. I went and I picked up my library card. It was, you'll appreciate this, knowing how cheap, how I shouldn't say cheap, how frugal I am. But I went to the library and I said, yeah, I need to renew my library card. She's like, do you have your library card? And I said, no. She goes, it'll be $2 for a new library card. And I said, but I only use it for online subscriptions and ebooks and stuff. And she goes, oh, then you don't need a card. So I said, do I sound cheap when I'm trying to avoid a $2 library card fee? She goes, don't worry, you're not the only one. I thought that was funny. Let's do a scan. I didn't find a lot of scans. I think J&J was the only one that I saw yesterday. Nothing in the core portfolio, or that's low-cost ETFs. Let's look at brokerage holdings. J&J. Oh, come on. We're going to go down to the bottom. I do have Jim Cramer's 10 stocks that will perform well in 2023. J&J. J&J is not a bad one. I mean, I'm not a super fan of it, but I hold it. I've held it since for quite a while. I do want to post Healthcare and industrials. My weekly stock posted the momentum is for industrials and healthcare this week. I'm gonna pull that. Let me see. Bum bum bum. Let's go to Twitter. What do I have a notification for? Somebody like something. Trading chick. Definitely not the real one, I bet. No, 502 followers. Whatever. Fake. Let's look at my weekly stock. There he is. And he posted. I guess he just posted it on Instagram. I didn't go over his weekly stock. To Mark. It's a great newsletter, by the way. If you guys haven't gone through it, should definitely go through this one. I need to start my Substack, but I haven't. I guess it's just on his Instagram. We were talking about how you keep track of all your socials, and it's hard. But, okay, let's go to scans. Nothing in low-cost ETFs. Let's see if the spider sectors. I don't think anything. Nope, nothing crossed up. Let's go to my watch list. DocuSign. UPS. This is quite a lot, actually. And I like Docu. Wayfair. I'm not a big fan of Wayfair, but I think it's still expensive. Adobe, K-Web, Boeing, Okta. Okta's still expensive. The hell is CI? CI, you think? You said? Cigna. Healthcare. Yeah, I think you've liked Cigna. I mean, how can you not like Cigna? Look at that chart. It's a great looking chart. Oh my God, that's a great looking chart. Let's do a trend line. Let's do a range. Let's do. I'd like to. It seems a little expensive if we. Again, touching at least 3 points. You might be okay on this pullback. I mean, just based on that one. P is 15, so it's not horrible. I mean, you know, UNH is what? 26? Yeah, 25. Let's see. Wells Fargo overweight 355 is the most recent target. I'm trading at 322, so you still have about 10% in it. The RSI is at 37. Only problem is, again, the 52-week, you're 5% below your 52-week, which is 340. You're 50% above your 52-week, but are you going to get killed with it going back to 273? I don't think there's any well-run healthcare company that's going to shoot down, even in a crazy one. Hey, James, you got TrendSpider? Or are you using, I think you use another program. K-Web's up 4%. It's funny because I had to sell BABA at the loss. I think I took like a $20,000 loss on BABA. And so I sold it. So I'm restricted from trading it for another 30 days. But it's flying. I'll put in Cigna. I'm going to put in Cigna. We're going to leave that in there. Okay. We did not own. Let's do ARC. And a lot of these will come up in ARC. UPS. Cirrus. Ooh. That's an interesting chart. With the MACD crossing up. CERS. I bet they're not making money, though. Yeah, it's an ARC fund. Find. $9 is the price target. Pretty regularly, and they're trading at 3. Yeah. I think I said it yesterday. If you're not trading, it doesn't even matter. The amount of cash doesn't matter. It's really the well, I guess if you're trading like $3-4 a trade, it does matter. But I think it's the amount of trade because, and it's the way I look at it. And again, I'm probably a little bit out of touch at this, to be honest with you, James, because $300 to me is like, the tool is great. I won't pay $300 to a guy like Jim Cramer to give me alerts or anything of that sort. I find that to be just ridiculously a waste of money. But for a tool that improves my education that I can write off against income as a professional expense, I just kind of view it as, hey, $300, $350. Well, you missed that sale. Get it next year in the sale. But it doesn't make sense for everybody. Really, really doesn't. And I get that one. Last thing I want is for somebody to take my advice and then say, I found no value in it. I'd feel horrible. I really would feel horrible. ITXX. Synopsis. I don't like either one of those. Okay, let's go to the S&P. I probably should be looking at the Russell as well, but I'm not as familiar with. I trade large cap. I always tell you guys, trade what you know. Charles Schwab is good. In fact, I almost went to Charles Schwab. I had I did have Schwab before, but I didn't have a lot of money in Schwab. I had just a little bit of money in Schwab, and I didn't find value in their tools. And so I wound up going with Fidelity. But I almost moved to Schwab because, and if you ever get to this realm of financial kind of independence and stuff like that, hold on. My Miss America reimbursement. Sorry. Hey, and if you move to James Cooper moved to Fidelity last night, he sent me an email, and I'm testing it out with my buddy Stuart, who I think is on vacation this week. But yeah, I think I can get you $100. I don't know if there's requirements of how much you have to put in. I don't know. Stu's just said, hey, if you have listeners who want to come over from another brokerage, just tell me their email address and I'll get them $100. I don't know what I get out of it. I don't know if I get anything out of it, but I love Active Trader Pro. Honest to God, I love Active Trader Pro. And I keep telling Stuart, I said, the only reason you guys are keeping me is Active Trader Pro. Other than that, I'd be taking my money. Once you get to a certain, and the reason I was going to go to Charles Schwab is they have a great line of credit program for their high-value clients. And so essentially, say, for instance, and this is part of what quote-unquote FIRE living is all about, is not necessarily not paying taxes, but it's pushing taxes out further and optimizing taxes. But say I have $1 million in Apple stock, and I need $250,000 to live on. Well, if I sell, say my average sell price is, $50 and Apple's trading at $100, I have to sell the $250,000 worth of Apple stock. I would have to pay taxes on that, blah, blah, blah. What Charles Schwab is famous for doing is providing a line of credit to their clients at a significantly lower rate, because capital gains would be anywhere between 15 and 20%. And even in high interest rate environments like you are today, well, I should say higher interest rate environments like you are today, you would still be paying significantly less on a line of credit than your taxes. And you don't have the tax event, and you get to keep that, and you just pay back, whatever loan you want at whatever price you're getting. So in the line of credit, the actual interest rate moves. Sorry, I'm getting emails and stuff. Yeah. Boyle's on a run. Let's see. If I were smart, I'd probably have money all over the place like I did last time, but Fidelity gave me money to move everything in. It was pretty good money. It wasn't horrible. I mean, when somebody's going to give you thousands of dollars just to move your money somewhere, it's not a bad strategy. Okay. I was looking at Active Trader Pro. Here I'm on Active Trader Pro. I was looking at my settings. There's different candlesticks, and you can see candlesticks. The standard candlesticks, they're kind of hollow and hollow and filled. Filled, I kind of like a little bit more. I use OHLC, which is open, high, low, close, which is the tick mark is on the left for where you open, and the tick mark on the the tick mark is on the left for where you opened, and then there's a tick mark on the right for where you closed. And so you can see, like, you opened this candle. You opened at 1450 down here. Your low was 1445. You closed at 1468, so it's a green candle where it's on the right-hand side. So sometimes hard on the map to see the left and right, but you can find it usually. But see, it's on up above the 9-day. It's up above the 21. The VWAP is at 1453, and you're trading at 1473. So it's got confirmation on the 5-minute. Only problem I have with Active Trader Pro is it loves to get over too far to the right where I can't see the candle. Oh, come on. There we go. They're good. They're automatic like this. When I'm day trading on Active Trader Pro, I don't always. I like, especially here early in the day. You're just looking at today. Say if you go to 2-day, then it tends to break it out a little bit more. And God, why does this do this? It puts it all the way over to the right. But the volume shelf, like you can see, 1430 to 1449 is pretty much the biggest volume shelf there. You're building one up here, 1510 to 1529, but that's from the previous day. So I think that's where it's getting pulled up to, is 1510 to 1529. We're going to open up here in 1 minute. That's kind of what I'm waiting for, is to see where we open up. UVIXI, by the way, should be a pretty good. I hate to say that the VIX can't go down, but the VIX right now is at 22.96. And UVIXI is at $6.71. Look at the spike yesterday from 675 to all the way up to 705, so 25 cents. Let's see. What's 25 divided by 675?
It's approximately 0.03703.
3% move. It's not. You're not getting huge moves in this like you did in 2020 and 2021. But God met us up. So the NASDAQ opens up 0.58, Dow opens up 0.32, S&P up 0.46. Apple's up 1.3%. Microsoft is down 3%. What happened to Microsoft? I got to look at this one. What's the news on Microsoft? Oh, it downgraded. Why is Microsoft downgraded? Continue. Target declined more than 1% after Wells Fargo downgraded from overweight to equal. Tesla inch lower. Apple gained. Microsoft traded down 2% after UBS downgraded the stock from buy to neutral ahead of today's stock market open. See, Investors Business Daily. Oh, they're okay. It's just, there we go. UBS, buy to neutral. $250 price target. I don't see how you can put a $250 price target on Microsoft when but I got out of Microsoft. I'm still on Active Trader Pro. I'm going to move you back to Safari. Yeah, so here, we're covering the gap down to 226. I mean, I believe I said it yesterday that 238, I don't think you should, because I think you were a few days ago. I think that the max was you were going to get up here to 246, but you still needed to cover this gap. And you still got, I mean, look, it's going to get you out. See, it's crossed down. You're just waiting for a couple of, in my algorithm, you're just waiting for a couple of moving averages to move. And then the algorithm's going to get you out. Simple as that. Your RSI. And it feels shitty to buy something on a day like this where, but shit, my $1,000 portfolio, I made, the only problem you have with Microsoft is that PE at 25. I don't believe that, again, by the end of the year, I think you're a $250 stock. But I would wait until you get down to the 225 level. I mean, your 52-week range is between 213 and 335. I would rather see you closer to the 220 level, just because I do think that you will get to the 220 level. Patience. I don't think it's out of the realm of possibility that you'll get down there. I mean, it's down below 230 right now, 229. So I don't think you're out of the realm of possibilities there. UNH, okay. I think I've got everything. I'm not going to go over a bunch, but maybe I'll trade a little bit more. But it's already 9:30. Let me start this podcast. Good morning. It is a rainy and gloomy day here in Atlanta. It's Wednesday, January 4th. I got some stocks to go over. Let's start off with a famous. Jim Cramer predicts these 10 Dow stocks will perform well in 2023. This is the kiss of death for all 10 of these companies. I mean, you look at these 10 companies and you're just like, okay, what the F is he thinking? Chevron, CVX. Let's take a look at CVX. It has been running super, super high. It is right now at 173. The algorithm probably is going to get you out in the next couple of days. I predict it to come down here to 168. I've said it before, anything in the 160s, I think you can buy it, and I think you can trade it up to the 180s. I do think that probably is where you're looking at Chevron in 2023. I think he's out of his freaking mind. I think he's a pump and dump artist. I think he bought a ton of this for his charitable trust, and he's trying to pump it up for 2023 so that he can dump it. He should be investigated by the SEC. This guy's as bad as Sam Bankman-Fried. Cramer is a douche. Don't get me started. It's a good company. Dividend is 3.26. Something that you don't mind holding. December 14th, neutral to underperform from Exane BNP Paribas. October 24th, downgrade, buy to hold. 177 and a 190 price target. You're trading at 173. I do think that you're getting down to that. Anything under 170, I think you take this one. I don't agree with Cramer that CVX is going to be great. If we go into a recession, these oil companies are going to get killed. Honeywell, I don't think it's a bad investment, but you're running up against a recent run-up. I mean, look at this. 214. You just had a 20% gain in this, in the algorithm from September out to December. 23%. HON is the symbol. Let's look at this one. You are 3% below your 52-week high. You're running up against 52-week highs, and this douchebag heading into a recession thinks that this is going to perform well. Procter and Gamble. This one I put out in the private Facebook group that's in there. It's a PE of 26. It's a 52-week high is 165. It's 8% below its 52-week high. You just had a recent run-up on this one, I believe, as well. Procter & Gamble. You're in the middle of a run-up. 124 at October 12th. You're still in this one at 152. This douchebag wants you to buy it close to its 52-week high. It's 8% below its 52-week high. Travelers Corporation. Let's look at this one. Travelers. TRV is the symbol, sorry. TRV. Same thing. It's run up. Just had a 188 price. You're getting off a 20% gain on this one. TRV. Let's look at this guy's screaming about the PE values are too high at some of these tech companies. Some of the tech companies are lower than what he's referring to. Travelers 13 PE. That's huge for an insurance company. You are 2% below your 52-week high of 191, and he says, "Oh, it's going to perform well." J&J. This one, I tend to agree with him. I don't think you're going to make go up to $200 per share on this one. I think you'll do fine with a 2.54% dividend. You are 4% below your 52-week high. I just got rid of some of this because it's close to its 52-week high. You're coming off a good run on this one. 4%, 1%. You're just kind of floundering in the 170s. He wants you to buy it here. Disney, if there's a more expensive stock that's in the Dow, I don't know. Now you're down at your lows. This is one that I do think could come back, but it's got a kiss of death on it right now. You're 44% below your 52-week high. Your 52-week high is 160. You're trading at 88, but the PE is 50. 50. Earnings per share this year are expected to go up 170%. And that's just because we're reopening, blah, blah, blah. I don't think this one's a bad one. AXP. I've said AXP was a great stock at 160, 170. I still think it's a great stock. This is a good one. This is one I can't beat them up over. The PE is 14. You look at Visa, the PE is 29. So AXP, I think, is a good one. Cisco, I owned Cisco back in 1990s. This one, it's probably at the same price that it was in 1990s. We'll look at a chart. Its PE is 17. It's got a 3% dividend. You're 23. You're right in the middle of its 52-week range. But you know what we'll do? Let's look at a long-term chart of this one. I'm going to take you back, and I'm going to look at a monthly chart. Now, tell me, has this been a phenomenal stock to hold all the way since 2000, the dot-bomb days? If you bought this in the dot-bomb days, you paid $50 a share. You're trading at $48 a share right now. Is that a great company that's going to provide you incredible wealth in 2023? I don't think so. Salesforce, CRM. This is a crazy expensive stock. And if you look at this one, take a look at this monthly. This is a stock. Do you think this one's coming back? It's crossed its 50-day. You've got downward spiral. This is a monthly. That's the entire year of 2022. There was no reason to be in this at all in 2022. So all of a sudden, he's now got a good feeling about this because the CEO takes his calls. The PE is 486. Where in the world does he think that this one's coming from? Goldman Sachs. I like Goldman Sachs at 300. I don't like it here at 340. Its book value is 307. Your PE is 922. I think you've still got room to go down on this one. And if we look at the algorithm, I'm not even going to look at the algorithm on Salesforce just because I don't want you in that one. But Goldman Sachs is using the 200-day as its support, 340. If you can get in at 340, I think you're okay. I think you'll come up here to 380 again. I think it's a phenomenally well-run business. So as far as what you want to invest in, Johnson & Johnson's going to stay in the 170s. You're going to make a 2% gain on that one. You ain't going to miss on that one. Disney, I think you can gamble on. American Express, I like it. And Goldman Sachs. Let me write those down. I'm going to write those down for me. I think, let's see. I'm going to write for me, Disney, American Express, and Goldman Sachs. Out of his 10 stocks, I think there's 3. And those are 3 that you can take a chance on. I don't think you'll kill it on Goldman Sachs. I don't think you'll kill it on American Express. I think you could make 20, 30% on Disney. Again, Iger's back. It looks good. So my weekly stock pick posted, there's momentum for industrials and healthcare. So I thought I'd take a look at the spider sectors. Industrials is XLI. Is the spider sector. And you can see it does have some momentum with it. It's kind of down here. It's got this gap down here that it almost filled at 96. 99 is not a horrible place for it. You're coming off this just historic 20% run. And you've got this 11% run. But right now for a momentum, he talks on a weekly basis. Mine is a 4-hour. I think you could probably make a couple of bucks on this one, but what I would do is take a look at what the XLI, the components of the XLI, and you can do that in your brokerage to try and just look up the ETF XLI, and it'll tell you what it's made up of, and take a look at that. Healthcare is XLV. Yes, XLV is healthcare. You had a cross up here, 136. You're trading at 135. Again, I don't think that, from my perspective, from my weekly stock perspective, he talks of momentum for a weekly kind of thing. These are 2 sectors that he believes are in a momentum for this week. You're coming off of pretty good runs for these. The healthcare, you bought in on October 14th, and my algorithm got you out on December 16th with a 7% gain, but you could have gotten significantly higher here, selling at 140 instead of 135. So I do think that subscribe to his newsletter. If you want to just look up on Twitter, I follow him. Just look up my weekly stock, and you can see his newsletter. It is a phenomenally well put together newsletter. He does a lot of work on it. It comes out once a week. He tells you which stock is his algorithm. He's based on momentum. He's a weekly stock trader. And last year, I think he made like 20% last year. God, I wish I made 20% last year, but he's got a great system. One that James on YouTube, we were looking at it. I was hanging out on YouTube for quite a while. Cigna. And I drew this chart. And if you're looking on YouTube, you can kind of see the chart that I'm looking at. I drew these trend lines. And what I did was with Cigna, I took the bottom portion, and I said, okay, let me look at touching 3 points there. Or I'm sorry, I took the top portion, touched 3 points there. And then I touched 3 points on the bottom. And I just said, okay, let's take a look at this trend line. You're kind of down in the lower half of this trend. So while the algorithm doesn't necessarily get you into Cigna's got a RSI right now of 34. The MACD is crossing down. Let's look at some volume levels here. Let's pull this volume level I'm going to pull it to November 3rd. So we'll look at the volume levels since November. You've kind of got your volume shelf here. If you break this, I think 310, you're only trading at 318, but I think 310 might be a good volume level for you to try and get into. I don't think that 310 is going to break this kind of run upwards. But if you wanted to get into healthcare stock, I think you could get into that one. UNH was down, I think, yesterday when I saw it. The algorithm has you out of this one. Like I said, my particular theory, I think you can wait till it gets down here towards 500, 503, 502, somewhere in that neighborhood. If you wanted to get into this one, I thought that was good. Let me look at Netflix. Netflix is one I personally have never invested in. But I will tell you, I'm bullish on this one. I've been watching a couple of Netflix shows. It does not integrate into my Apple TVs, and I am the bougiest of bougie streamers. I've got Apple TVs, which are $100 devices across my house. I think there's 4 Apple TVs in the house. I think I've got 1 Roku. I've got 3 Rokus. I've got 2. And yes, I live alone and I have like 9 TVs in the house. I've got a couple of Amazon, and nothing beats Apple for me. Apple just integrates better. It works so much better. The box has way more memory than any of these sticks or any of these other boxes. It never freezes up. It's just a really well put together software and hardware mixture. But Netflix doesn't integrate into the Apple TV app, which it allows you to track. So essentially, every other app that I have, Netflix, Hulu, Paramount, Stars, Amazon, everything, I can just go into the Apple TV app and I have my list that I've curated, and it'll recommend some other stuff and recommend new stuff, but I have it curated. The only app that doesn't integrate is Netflix. And so I've got to get out of the Apple TV app and go into Netflix if I want to watch stuff. I find myself doing that. I really do. Netflix is the only app, if I had to get rid of all my streamers and only have one, it would be Netflix. And I know it's expensive, but here's why I'm bullish. If they get on hold of these passwords, and it was said before that for every paid user, there are 5 unpaid users. And that's just across the U.S. If they just get 1, it's a 20% increase in revenues. If they get 2, it's a 40% increase in revenues. Now, here's the other reason I'm bullish. They have trivia games. Don't know if you know this, but they have trivia games on Netflix that you can play at parties. It was crazy. It was fun. I don't think you can play against people yet, but that's probably coming, I would assume. The other thing that they have are Nike workout programs. I said I was going to do it yesterday. I did not do it. I went to get my library card, and I was told that my lost library card cost $2. And I said, I don't need a card. I just use it for ebooks and digital subscriptions. He said, oh, I don't have to charge you anything. I said, do I look cheap trying to fight a $2 lost library card? She kind of nodded her head. So I felt like a douche. I felt like Kramer. I'm sorry. Yeah, so I went for my library card, and then I did some grocery shopping, and I came home, and the dogs needed a walk, and then it started to rain, so I decided to, check the house out, blah, blah, blah. I've been gone for a while, so I got busy. But I'm going to do the Nike workout on Netflix today. Those are 3 big reasons why I'm big on Nike, or I'm so big on Netflix. I'm big on Nike, too. Netflix's RSI is 56. My particular guess would be I would want it closer to the 200-day, but the algorithm just triggered on 290. I think anything under 300 on this one, I think you're good. And the reason I think you're good is if I drag this way back and we just look at this gap that was April of last year. This was where they missed their subscriber forecast. That gap starts at 350. I think you're covering this gap. So anything below 300, I think you've got 350 in the bag. And the reason is they've got this business under control. It's similar to Meta. Meta is getting their spending and their hiring practices under control. This one just triggered a buy at 118. You're at 129. You just got out of a 22% gain right before that trigger. So I think you're coming up to this 200-day. You might use the 200-day at 131, 132 as a resistance level if you break to that 130 level. Because here, if we go to Meta right now is an 11 PE, and it's a pretty solid cash flow business. Its 52-week high is 343. Its 52-week low is 88. I think if you get to a 120 a teen handle. So if you get to 119, 118, 117, I think you snap this one up because I think it's put in a pretty good support level here at about 115. So I think you take that teen and I think you run with it. But this is why I'm big on Netflix. This is why I'm big on Meta. I'm also big on Google because of its value. Let's talk about some energy. Energy's getting killed. Devon is down below 60. Oxy is down below 60. LNG, remember I was talking about this one? And we talked about this one way back in July where it was kind of capitulating here around 140. And I said if it breaks 150, and I was listening to Josh Brown, and if it breaks 150, then buy it. Hopefully folks bought it, and it rode all the way up to almost $200. I think it was, 175. So you made a pretty good killing in that. But what we've seen with LNG, just like oil, just like all the other natural gas, is all the way since December, it has just slid down. And it's warmer weather, and it's natural gas coming down to its regular prices. Warmer weather in Europe, you're talking about 60s at night. We went over it yesterday. There's no reason to buy this one now. You can see it trading below the Bollinger Bands. It's got a green candle in it because it just, it's opened. It's higher than when it opened up right now. So the current candle is green. There's no reason to think that this one's coming back. It's still super expensive. If we go over here to FinViz, it's not making money. It's got a 1% dividend. You're 23% below your 52-week high. You are 38% above your 52-week low. And so I think this one, do you ask me, could it go back to 100? I think it could. I think it could go back to these 120 levels. We talked about Boyle and KOLD. Right now, KOLD is still in that big move. Boyle, let's look at Boyle real quick. I'm looking at it on Active Trader Pro, but I'm not going to switch the view. You're at 1450. It's up 1% in the pre-market. I think you're just capitulating here. KOLD is still your play. You've got gaps all the way down. This is a messy, messy chart. If you're in this anywhere from $12 to $17 and you're holding it at $32, you're greedy as F. I mean, at some point you've got to get rid of this. If you're in at $12 and you're at $32 right now, sell the pig, sell the cow, sell the farm. I mean, it is coming down. The RSI is at 79. So at some point, Boyle becomes a buy, and it's just slipped too much. You can look at Boyle. We were at $30, I think, just at the middle of December. Yeah, $43. I was talking this one was a great buy at 38 because I thought it was going to come up here to this 200-day. Nobody knows the weather. Nobody can tell what this stuff's doing. Again, rule number 1, don't listen to some douche on the internet. Rule number 2, never listen to Jim Cramer. Rule number 3, there's a douches on the internet who'll tell you what to do. It's your money. So, again, take these are triple levered ETFs. Put your stop losses at a pretty tight, but take your profits. Don't think that, hey, just because it's at 32, it can go to 40. It could, but greedy people, look at me. I was up 30, 40% in BABA, and I just held on to it. I wound up writing off like 60% loss. Do as I say, not as I do. So let's go through one that I wanted to look at. Jim Cramer was on last night. There was a guy who said he bought Hertz at about, I think it was pre-bankruptcy. He had Hertz. And Jim Cramer said, well, I think it's going up. Hertz is one. Anybody who's rented a car recently knows the headache of getting a car and the prices that you pay. There's a gap up here. And I noticed this last night when I was looking at it. Between 17 and 18. It's kind of capitulated here. And I'd want you to do a little bit more research than I, because I have not done any research into the actual fundamentals of this. You're 5% above your 52-week low, but you're 40% below your 52-week high. This has been a slide. Look at this chart. Look at that trend line that they've got going right there. It's just a downward trending stock. I don't know that this is a bad one at this point. And the only reason I say that is just because at 15 and this much, is it something you take a chance on? Again, it was December 27th, $15.37. You're only trading at $15.25. So it's capitulating here. Those Bollinger Bands are syncing up. And the MACD is low enough, the RSI is low enough that travel, man. If people are coming back, travel. It might be a good opportunity. I'm going to keep it on my watch list. I'm not necessarily betting on it. I might put small money into it just to see what it does, and then dollar cost average. Verizon's above 40. This is one I was looking at. Your buy-in was at 37 on December 22nd. I said, hey, it's below its 200-day. I think you're going to use that 200-day as resistance. That was at 39. You've broken through it. I think this one goes back to cover these gaps up here at 44, 45. Verizon is killing it when it comes to 5G. Now, the cell phone race is a race to the bottom, but this has a 6.51% dividend, and it's a solid dividend. The RSI right now is at 73. It's expensive, but I do think you have 10% even from this $40 mark. I think you could come back up here and cover this gap at 44. Its PE is 8.72. If we look at AT&T, their PE is 6.9. AT&T is just a poorly run business. It's looking like it's in a positive trend right now from 15 up to 19. And I think these solid businesses that make money, that produce solid cash flow, yeah, they may be spending, but they're probably cutting back spending. AT&T's dividend is 5.92. You look at T-Mobile. If I could type T-Mobile, TMUS. Watch this, 113 PE. This one's just too expensive. There's no way you get into this one. There's no dividend. You're 9% below your 52-week high. That's why I think Verizon and AT&T have turned around the T-Mobile growth story. That's essentially what you're getting. So I put that down as, hey, that's a good one. NVIDIA. I got out of, no, I didn't. I'm still holding my my AMD because it's short term. I forgot that I went over that. But NVIDIA is touching this 200-day right now. You can see it used its 200-day back here in August as resistance. It kind of broke through it. Now it's down below it, and it's kind of capitulating around there. It's got this gap down to 138. I think that gap was covered right here. So as these Bollinger Bands, as this top one comes down and this bottom one comes up and it cinches up a little bit, I think you're getting ready for another move. And just looking at the MACD and the RSI, my guess is this move would be up. And you look at these, the volume shelves right here. You've got a volume shelf right here at about 142. If you break that one, you're going down to 124 because there's just no room down. Between 135 and 142 is kind of your support level right here. I think 163, you've got it in the bag. Long term, I do think that this one probably gets back to the $200. It's a super expensive chip stock, and chips are just not very in favor. You're 34% above your 52-week high, low of 108. You're 52% below your 52-week high of 304. I think you're buying in a good place here for long term, I should say. Long term, I've said that the 120s on this one for long term were a great buy. I think that continues to be about the right price, 120 to 140. I think you're good there. Long term, you might lose money in the short term. So identify what portion of the trade you want to get into. Okay, we're going to go over scans. One that Jim Cramer says will perform well in 2023. I do not agree with him. I own this one, but J&J. J&J is the symbol. Johnson & Johnson. 178.17 is the buy. You're trading at 179 right now. This one is right up against its 52-week high. 52-week high is 186, so you're 3% below that. It's got a good dividend of 2.54%. Over the past year, it's up 4%. So 4% in a year. I'd take that along with a 2.5% dividend. I've held on to this one. I sold a little bit of it just to take some profits because I have held on to it so long. One that I like that is probably crazy to actually like is DocuSign. I like their business. This is a secondary cross up here on a run that's currently going on at $50.23. You're at 57. So you've made your 10%, but it has a secondary cross up. The RSI is at 61, so it is expensive. It's holding its 200 day. Its 200 days at 52. So your downside would be down 10% from 57 to 52. If you hold it, just put your stop loss in at 52, I think that golden cross is coming. You see that 50-day coming? That 50-day hasn't been anywhere near the 200-day for a long, long time. I mean, look at that. You just haven't touched it. And these are 4-hour charts. Let's go to daily. We'll look at the daily just to see, is it turning? Yeah. See, the 50 days finally turning positive. I think you may have reached a bottom in this one. And if you've reached a bottom, then I think we might be good. Here's the thing. When you look at the actual, they're not making money. Their forward PE is 26. Earnings per share this year are expected to go up 72%. In the last year, you're down 62%. You're 62% below your 52-week high of 156. You're 47% above your 52-week low of 39. So I think it's a good, it got a cross up. I like, again, I'm a big fan of DocuSign for closing any legal stuff, signing your doctor stuff. I like DocuSign. Another one that I like, UPS. They've had some troubles of late with shipping and stuff like that. You have a cross up here at 175.24. This one, the algorithm makes you 15%. Buying and holding makes you 8%. There's 29 positions in 1,000 candles. You win 38% of the time. Your average win is 5%. In my mind, I think you hold this one because I do think as shippers go, I think you're going to see this one pick up. I would expect this to be back to $200 a share. If we look at some of the fundamentals of this one, your PE is 13, so it's not a crazy expensive stock. You're 24% below your 52-week high of 233. You're only 13% above your 52-week low of 154. You got a 3.47% dividend. That's a solid dividend. I just, again, this is a solid company that I think will be at $200 by the end of the year. I don't think you trade the algorithm. I think you just use the algorithm to find your entry point on this one. Another one that I like, but I don't use is Adobe. I use PDFs, but Adobe's in this ascending triangle, and it's just stuck here. You can clearly see that 200 days providing resistance, but it just broke above the 200 day. So at 336.80, I think you might have some of these gaps. Like this one's below the 200 day, but it's at 380, 384. I think you might have that gap in its target. The MACD is kind of flat. The RSI is at 54. It's kind of in no man's land. That ascending triangle is good, but it's big into this ascending triangle, so you're going to want to see it to break above 345, 346. And I think if we hold above 345 or 346, I think you're off to the races. That's just my opinion. I had to get out of BABA. I wrote off like an 80% loss on BABA, but KWeb, good God, KWeb. You had a buy-in here at $19.95 on October 27th. You've got this huge ascending triangle. You're at $33 right now. KWeb is a China ETF. It's been a favorite. It's got gaps all the way up. It's up above its 200-day. When you look at KWeb, let's look at the 52-week performance. You are 15% below your 52-week high of $39. You are 94% above your 52-week low of 17. So I do think that, it's a secondary cross up. The RSI is high. China's just flying. They're expecting it to be up. Boeing, legendary run on Boeing. God, this you've got this ascending triangle right now that you've broken out of. 129 on October 4th. You're still in that buy, and you're trading at $200 per share. The RSI is super, super overbought at 71. There is something coming out. They're going to reinstate this dividend. There is something that people on Wall Street know. This at $200, I think if they reinstate the dividend, I think you're looking at $250. But, Boeing is still, right now, it's got, it's not making money. Its forward PE is 82. Doesn't have a dividend. Performance for 1 year, you're down 3%. So you can see it back here in April of last year. This is where you were. You were at 200, and you did this dip, and you're back up at 200. So you've made the full round trip in a year. But Boeing had a cross up. Another one that has an interesting chart, but I don't know. I found it on the when I scanned the ARK funds, is Okta. This is a software company. They're not making money. They just broke the 200-day. And the question is, this is a great company. They've got some pretty brilliant software. I don't particularly know what it is. I've just read articles on it. And when I say that, I am completely disclosing. It's a software company. The forward PE is 242. I think this is like Snowflake. I do know that Snowflake software, I would probably want Snowflake over Okta, to be honest with you. January 4th, 2023, one of the analysts target $90 price target. It's trading at $70. And that's why you're up. That was today, January 4th. December 15th, Webbush, $86 price target. December 13th, Cowen, $70 price target. And you're at the $70. In December 13th, let's see, what were you trading on December 13th? Let's look at December 13th. You were trading at 73. Brilliant for, who was it? Cowen, to say their price target is $70 when you're trading at 73. Douches. But that's it. So if I'm looking at some things to trade today, I'm looking at some Boyle maybe. Let's go over to Active Trader Pro. Let's see what Boyle's doing. Boyle right now, it doesn't have any justification. No volume. It's lost it. So the market opens and it loses its validation. KOLD is your play for the long term. KOLD might go up another 10% today. Let's see what KOLD's down, but look, we're going to move this in so you can see. It's above the 9-day, above the 9-day, above the 21-day, above the VWAP. It's on the upper end of the Bollinger Bands. The volume level is between 32.55 and 32.64. You're trading at 32.40. So it's on a downward trend right now. It's got to be brought down closer to that 9-day. So, yeah, it's just, again, are you going to, it's a 5-minute. Let's look at a 1 minute. See if it has any volume whatsoever. Oh, one that I did want to bring up is UVixy. The VIX is at 22. Remember, that wants to be at 30. Especially if we're heading into a recession. So UVixy is one to keep an eye on. I think it's at 7 when I checked it last night. It's at 671. So yeah. God. UVixy is one. Look at that. The volatility is going up. But it's not going up by much. I mean, you're talking about cents. See how it spiked there? Right at 10 o'clock. I think there was news. ISM Manufacturing PMI, 48.84, December versus 48.5 estimate. So it was below. Manufacturing is getting weaker, so the VIX is going up. Volatility will go up. I think I gave you enough for today. It's a half-hour show. If you're on YouTube, I'll be hanging out there. If you made it this far, rate it. Rate the show. Hit the 5 stars. on Spotify. Hit the 5 stars on Apple. Just rate it. Leave me a review if you want on Apple. I think that helps a lot. If you want to see the charts, go on to YouTube. Join us in the private Facebook group. Chat in there with other folks who kind of listen. I think we've got close to 100 people in there. It's not many. I mean, we got thousands of people that listen a day on here. It's like pulling teeth with you people, trying to get you over there. Remember rule number 2, never listen to Jim Cramer and those 10 stocks that I just showed you. Half of them you're trading close to 52-week highs. And if he thinks that we're going to continue higher into a recession, he's out of his effing mind. Whatever. Don't get me started on him. Okay, I'll talk to you tomorrow. See ya. Share, export song to disk. Boy, I really went hard on Kramer today. Morning, Dawson. Boy, it's funny. I was looking at. Let's look at. Verizon is one, and I looked at it last night, and I'm like, I'm gonna go to bed and I'm gonna sleep on this one. And I wrote it in my notes, and then I'm like, fuck. This looks fantastic. And I do think you're looking at this 44. I think you got 10% in you. Problem is, look at the RSI. It's at 72. People are finally getting back into this. Oh, and you know what I got to do? I got to put in earnings, dividends. That's why. Look at that. You're getting a 7% dividend here on January 9th. You ain't going down before that. People ain't selling before they get that dividend. And then you got earnings coming up. You got some good catalysts with Verizon. Shit, man. Let's look at Verizon Live. See what they're doing on Active Trader Pro. AT&T is one of your top active ones. Verizon's not on this list. I think if you get Verizon under 40, I think you're doing well. Who's buying into Verizon with me? I'm going to put in a buy for Verizon right now, I think. Let's do a little research. Because their dividend date is coming up. Couple days. 6.51% dividend. What's 6.51 divided by 4?
The answer is 1.6275.
You got an opportunity to make 2% right here in a couple of days. 1.6% right here. January 9th. You can sell it right afterwards, which I think a lot of people do. Mike, I think Verizon's a brilliant one here. Hopefully you got in under 40. I might put in it looks like it's trading at about $40.40 right now. It's starting to go on another run. Maybe I got a little more reach with the 14 people who are listening right now. You 14 fuckers are moving into Verizon pretty fucking quick. Save. Mike, high five. Nice job. I gotta look at my. Oh, I have a new message. Manage appointment. Reschedule. Service. I gotta reschedule my Mike, I like it. I like it at that price. Hold on, I gotta reschedule my appointment. Reschedule. Let's see. Finding next available time. Oh. Let's see. Sweet. Sorry. I gotta love Tesla. See, I'm a guy that doesn't necessarily like talking on the phone. And I got this from my dad, who hates calling people on the phone. And Tesla, you do everything in the app. I cracked my windshield, and I have to have the windshield replaced. So I called State Farm last night, got it all set up. Ooh, Simon Property Group above the Bollinger Bands. Let's look. That's a podcast favorite. That's in our core portfolio. Add funds. What? Fidelity's app is whack. Boy. Boy, $40.30 is looking good down here. Wow, I'm losing money today. And Apple's up. What am I losing money on? I gotta look at this. Because I don't have the ARC funds anymore. I'm losing money on Amazon. Losing money on Devon. Losing money on Google. Oh, Microsoft, my second largest holding. That's what it is. Not down on much. Salesforce is up 3%. Is that Jim Cramer? Here. That's Verizon. Since I started chatting with Tesla. And January 12th at 10 a.m. guess I can't rear harness recall. I hope they'll do it. Let me look. Micron's a great company. Myself and Dr. Tom Jackson think that Micron at 50 is a pretty good support level. It's 52-week low is 48.43. My personal opinion is that low holds. I don't know that I'd necessarily buy it when it's 5% up, thinking that you're going to be 10% up by the end of the day. I like to buy on weakness. But look at Bank of America, by the way. Up 1% today. Did I choose the wrong bank? I bought Wells Fargo on the news that they got a fine. It's up at 42.50. I'm holding it. MU's a good one. We'll look at, I'll add that to tomorrow. Thursday. Tomorrow's Thursday night football, by the way. I'm going to look at Verizon. I may buy Verizon. I'm looking at it to find if Verizon has some weakness. I hate buying on up days. I just hate buying on up days. I like to buy on down days. And when I say I like to buy on down days, it's just it's not comfortable to buy on down days, but it makes me feel better buying on down days. Okay. New episode. Quick upload. Do podcast. 1-4. What are we going to title this one? Where are my notes? 1-4. Okay. I gotta get this out of the way. Sometimes I can't see the damn screen because the microphone's in the way. Fuck, man. Jesus. Why in the world is it the beginning of the year and all of a sudden stop. Where are my notes? I'm typing in my notes about Jim Cramer's. Disney, AXP, Goldman Sachs. CVX. Honeywell, Procter & Gamble, What's Traveler's symbol again? TRV. J&J. Cisco. CRM. Okay, and then we're going to do, I like Netflix. Boom, 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 boom. Okay, who's got, look at Verizon, man. Look at that stock. It ain't giving me a buy opportunity. And the ex-dividend date is coming up. Okay. We're going to put in this. Oh, here. Boom, boom. Hey, how do you guys like the House of Representatives not electing a speaker? Boy, those Republicans are screwed. I feel, if you want to know what's really screwing up our country, it's dysfunction like that. Publish now. Okay. Edit audio. We're going to put in a transition of P-coat. Insert ad. Save changes. Okay. Okay. Boom, boom, boom. I published it. So does the market, Mike. See, here's my stance on politics. And I know I haven't done a Rick episode in a while. He hasn't called me, but McCarthy vows to stay in race. McCarthy's just a douche. Here's my take on politics. I hate the two-party system, but I do think neither party is right, neither party is wrong. There are certain factions of both parties that are absolutely 100% wrong. There are certain portions of each party that's absolutely right. The reason Jim Jordan doesn't want to be Speaker of the House, by the way, is because that the second he is Speaker of the House, there is an investigation into the molestation of those wrestlers that he was privy to at, I think, Ohio State or some university where he was a coach. He knew that there were other coaches that were molesting kids, and he didn't say anything about it. That's not somebody that I'm a fan of, and it's well documented that he knew, well documented. So, you're innocent until proven guilty, but I think in a court of law it would be pretty clear. It's not like these kids wanted to say that they were molested and that Jim Jordan knew, because they have some vendetta against him. But okay, let me tweet this out. Oh, I gotta sneeze. Okay, hold on. And by the way, I don't hate anybody. If you have a different opinion than me of politics, I'm still your friend. Opinions are opinions. Facts are facts. I have no problem with anybody with a differing opinion. I like Hurts. Man, I think Hurts could be one that just skirts in. Okay, let's cut this out. X. And we'll tweet that. We will tweet this. Okay, let's look at the top ones. SQQQ. I think TQQQ may go for a run. Tesla's going for a run. Still don't want to buy it. SPY. Neo. Okay. Tweet. Boom. Okay. Tesla's trending. Okay, let me see. Copy image. to Twitter. I want to do copy image. No. Do I have to save this image? Mother effer. I hate Twitter sometimes. Maybe that's why. Is that why? Nope. I guess I gotta save the image. Kramer. We'll just put it up there as this. Oh, you know what? I should just do it on. YouTube. Oh. Let's go to YouTube. And why can't I? Let's see. I think share. Boom, boom, boom. Copy. And paste. Okay. Do. Boy, I look like a douche when I'm looking up stuff. I can look up the analytics live. It's crazy. YouTube, I mean, Google is just so crazy cool when you dig into stuff. 7 likes. So only 7 you have hit the thumbs up button. Stream health. Stream health is excellent. Stream settings. I should put on closed captions. That'd be kind of cool. Unless live replay once stream ends. No, I want it listed because I think a lot of people look at it. Okay, I'm not going to edit it. But God, that's so cool. Okay, I'm going to get out of here. Oh, fuck. Look at Verizon, man. Market's taken off. Exxon has experienced a spike in volume. Is that good or bad? I love Active Trader Pro. Down here, I don't think you can see it. It's behind my head. Here, let me do this. You see behind my head, there's positions and watch lists. You can put in a watch list. I should move this over here. Let's see. Oh man. Okay, we're gonna move that over there. Smash that like button. Subscribe. I do need more subscribers. I need to start focusing on subscribers. But down here in the bottom right of Active Trader Pro, you can put in watch lists in Active Trader Pro. And essentially what it does is it actually looks for events. Exxon Mobil experienced a spike over the last 30 minutes as of 10:38 this morning. I don't see it. Let's look at it. I think it does it on a 60-minute chart, if I'm not mistaken. Yeah, you can see that. That's the 10:30 a.m. See the spike? Daisy, what's wrong? Come here. Come here. What's wrong? Do you want to come up? You want a hug? Is that what you're waiting for? Okay. Okay. We'll give you a hug. See? I know. See? Okay. Yeah, smash that like button for this one. Look, Daisy, I know. Why are you crying? I love you. I know. Oh, that's Tony. That's Mr. Tony. You know Mr. Tony. It's Mr. Tony. You see the car? The ears are up at attention. Okay, I'm going to put you down here. Okay? You're a good girl. I love you. Josh, hit me up on the socials. Hit me up on either, if you go to the link tree down below. I put on, there's a support the cop podcast, all other links. Look at other links down in the description. And you'll find either Twitter, Instagram, or there's a Facebook group in the Facebook logo. Hit me up on any one of those. And it's a fairly manual process right now, Josh, but I'll hit you. I'll send you back kind of what it is. Essentially, what I do, just to make a long story short, I'll send you the YouTube video on from TrendSpider as to how to set up your strategy tester. It's up here in the upper right. Am I on? No, I'm not. Let me go up here. So in the upper right-hand corner, you'll see strategy tester. And you set it up down below. There's an entry and an exit. It's the algorithm's back testing strategy. And so it gives you entrances like you can see here on Travelers. You've got September 30th, a 155 entry point, and a 20% gain here December 12th, right after the dividend was paid too. God, that's such a great trade. Look at this. This is what's crazy. Most people who have, it is funny. So I pulled back the volume level here to September 30th, where the algorithm gets you in at 155. And man, it looks like most people are still holding up here. Most people who bought during this run up have since sold. They've taken their profits. And again, Jim Cramer saying this is such a great buy, TRV. Fucking Christ. I mean, you're what, 3%? You're 1.88% off your 52-week high. Why would you be holding into that? Douche. Yeah, Josh, hit me up. I'll shoot it over to you. And again, go to TrendSpiders. Let's go to YouTube, and let's look up TrendSpider. I think TrendSpider, and their channel is amazing. If you go to their channel, you can look at how to use TrendSpider updates. I mean, just watch this stuff. They're live charting. They just did one 2 weeks ago. but there's a TrendSpider University right here. And you can how to use TrendSpider updates. There's 11 on this one. TrendSpider University is great. I won't play it here, but it's a 9-minute, and it identifies everything that you need up here on the right. Platform introduction, interface tour, automation, watch lists, charting, non-technical tools, multi-time frame analysis, alerts, market scanner, back testing. That's your strategy tester, indicators. Put it all together. It's a 12 video university. But I shoot you the strategy tester specifically. We can look up strategy tester. And how to backtest your strategy without code knowledge. Right here. User guide, strategy tester, in depth. And it's from 3 years ago. This guy, strategy tester. Use the trends. Go to the TrendSpider ones. Not any, how to backtest trading strategies with TrendSpider. This is from one. It's super simple. I'm telling you, it's super easy. But their videos are phenomenal, and it just gives you much better understanding of the tool. Fuck, if you want to pay them extra, you can launch. I wouldn't suggest it. My algorithm, like on this Travelers company, buying and holding makes you 33%. Using my algorithm over 1,000 candles, you only make 6.53%. So buying and holding, again, it depends on the company. This one doesn't have as high a beta score, which means it's not super, super volatile. The beta score is 0.08. So it's not super, super volatile. You would think with these moves and stuff that you could time them. You ain't going to time it. You're just better off buying and holding. And look, if we take a look at a weekly, this is a stock that's clearly in an upward trajectory. So in that type of thing, you probably don't want to use my algorithm. But that's what TrendSpider is great at, is trying to figure out, okay, do I use an algorithmic trading strategy, or do I use just a buy and hold strategy? So hit me up on the socials, Josh. I'll send it over to you. It's 11 o'clock. I am going to get out of here. I will let you guys know. And let me go back over to Active Trader Pro, because I was looking at Verizon. I just don't want to provide Verizon on the upswing. But I'm almost tempted to do it. Fuck, look, it's at $40.90. It's almost at $41. That's like a 2% move from where I was looking at it. Over the past 30 minutes, Palantir Technologies is outperforming the Russell 100 index. Carnival MACD line has crossed above the signal line. This one's way up. 5%. Carnival Cruises. This is why I love Active Trader Pro too. I mean, Active Trader Pro is just unbelievable. Between the two, if you have TrendSpider and you have Active Trader Pro, you have all the tools that you need. Now, it doesn't mean that, like a Bloomberg terminal paying $50,000, that's 100% better than these. But shit, if you're trading once, twice, 2, 3 times a week, just trying to make some extra money or trying to identify stocks that are good to get into, the two between Active Trader Pro and TrendSpider, you don't need anything else. You know what I wanted to look at? I think it was Viru. Is Viru the one that kind of took off? Yeah. Okay, all you degenerates, gamblers. Shit, look at this. If we go back in. And I don't want Valero. Polaris. I want Verizon. AT&T is probably doing the same damn thing, by the way. You got all the confirmation in the world on Verizon, but the RSI is at 76. Let's look at AT&T. Look at AT&T. This one's a great one too. Apple's up. TQQQ is up. Apple's got some positive momentum on the top of that Bollinger Band. TQQQ has got some. It dumped. Now it's coming back. Good for you, Dawson. I'm jealous. I wish I would have gotten some. See, I get this. Part of the bad me being a day trader and kind of what I ran into when I was doing day trading. I mean, 2020 and 2022, it was like shooting fish in a barrel. I mean, you put $50,000 in and you'd have $5,000 by the end of the day. And that's not even like if you bet on options, you were doing even better. I don't trade options just because, you could lose it on that one. But part of my ADD I don't get focused and I get lost. And like, look at Verizon's 5-minute chart. I mean, it's got all the confirmation in the world. But the RSI, look at the RSI right now. On a 5-minute chart, you're at 66. Your MACD is well above the volume levels here. I mean, look at that. That RSI, that MACD is just too freaking high. I ain't getting into that. Oh, I hate when I do this. Okay, I'm out of here. You guys have a great day. I will see you tomorrow. I hope you wind up 10% up on Verizon, you guys. I do think that 44 gap, I do think you're heading up here to this 44, that gap right there. I don't think you'll get to this 46, but I do think with that strong move up right before the dividend, I think you're looking at a 40, at least a 43 if I'm not mistaken. It's just too strong. I mean, you just crashed right through the 200-day. And even on the daily, when I looked at it before. Well, 200 days at 44. I think you'll use that as your resistance level. See, in the RSI is 71. I mean, at some point, it just gets too crazy. Overbought. But